Good morning, welcome back to BT. We're continuing our conversation with mortgage professional Alicia Iwanchuk to talk a little bit about mistakes people make. What is the number one mistake people make when it comes to their mortgage?
Missing payments. Don't do that.
That can be big. Banks
Yes,
don't like that.
That's right, exactly. But important to know, if you are going to miss a payment or if you're running into hard times and you need some help, call your lender, phone them. They might be able to help you first off with maybe getting a line of credit or a loan or something. If you have a good relationship with them, they're going to be a lot more forgiving when you do have trouble. But most importantly, call them.
Because banks don't want you to miss a payment. They want you to make all those payments.
Oh, of course they do, of course. But as well, they want to keep you as a customer. So a lot of times they'll be willing to help you. I mean, it depends on the lender. Not everybody's going to be the same, of course. Sure. But always, always, always call them.
And you can't call them every month saying, hey, swear to next week, I swear I'll have the money.
No, they're probably not going to like that too much. But if you have a legitimate, well, first off, try to make your payments all the time. Don't just say, oh, I'll pay it next month, or oh, I'll pay this bill next month.
Right.
That's not a good idea to do that.
No.
So keep your payments up to date. Always try to make them. Give your best efforts. And if you're legitimately trying, they're going to see that and they're going to want to help you.
Okay, what about for people who are going for their very first mortgage? Because that can be a very daunting thing. What advice, if I got one in the future, just got engaged, maybe a couple years down the road, we're going to get our dream home. What can I be doing now to build towards that?
You can make sure that you've got some credit happening. And if you don't have credit happening yet, get some. So what you need to do is get some credit cards, get a couple credit cards. Yes, you actually need to have credit cards because that's going to establish a beacon score for you. And you need to have a beacon score to get a good mortgage these days.
So a beacon score is what banks judge me on?
Largely, yeah, exactly. Okay. So it's basically a quick snapshot of your credit, and it's based on several different things. But having at least two pieces of credit with limits of at least about $2,000 or so, have them for about 2 years, use them responsibly, pay them off all the time. Or if you don't pay them off and if you carry a balance, that's fine too. Just make sure you're paying them. Pay them every month, don't fall behind. And again, same thing with them. If you're gonna fall behind, call them. Call them, because then they might be able to work with you. Who knows, they might be able to hold back reporting to your bureau. I don't know, but call them. That's
if I need 2 days before that paycheck clears, they can quite often give me 2 days.
Yes.
Okay, now what about, we've got our little family and we're going to get our very first mortgage. What do I need to keep in mind when it comes to actually applying for that first mortgage? Well,
you need income, for one thing, so you need to have a job. Or some sort of income coming in. If you're self-employed, whatever, that's fine. You gotta have income coming in, and you have to have a down payment. So you have to have at least 5%. Nowadays, yeah, zero down is a thing of the past. So, but you also need to have closing costs too, so don't forget that. Closing costs equal about 1.5 to 2% of the purchase price of the house. So you actually need to have about 6.5% in total to cover lawyer fees and title transfer tax and stuff like that. So, land transfer tax, title insurance, different things.
So I need about 6.5% of what my home is worth.
Yes,
in
the
cash.
Purchase price. Yes, absolutely, you do.
I gotta have that all together, but it can come from a number of different resources.
Yeah,
right?
oh yeah, it can come from savings. It can come from a gift from an immediate family member, like mom, dad, sister, brother, grandparents. No, immediate family only. Yeah, exactly. So that can come from like RRSPs, but you'll have a tax consequence if you're not a first-time home buyer. So you got to be careful there. But you can do it. It can come from any source of savings, basically.
There are lots of rules and there are lots of things to consider, and that's why you'd probably need a mortgage professional. We'll put all Alicia's info on breakfasttelevision.ca. We're going to take a break. Still plenty to come today on BT. It's fascinating how much change.